Hello, I'm David Hargreaves with 90 at 9, brought to you by interest.co.nz. This is where you get lots of things you need to know in 90 seconds at 9 o'clock, starting from now and including news that the US appears set to step back from the brink. Bipartisan agreement appears to have been reached that will see the so-called debt ceiling, due to be hit tomorrow our time, extended out to February the 7th, while government funding would be extended to January the 15th, so ending the partial government shutdown that began at the start of this month. The Senate and the House are expected to vote on the deal later today. As you'd imagine, the markets liked the news, with Wall Street surging toward fresh highs and Treasury bill yields falling. European stocks were up also, and the price of gold lifted by $8.60 to $1,281.60. But not all good news today, though, as the Federal Reserve in its Beige Book business survey reported that US economic growth remained modest to moderate. The report said that employment growth remained modest in September and price and wage pressures were again limited. This news comes about 2 weeks ahead of the next Federal Reserve meeting. In the UK, jobless claims fell 41,700 last month, which was the most in 16 years, although the unemployment rate stayed at 7.7%. But the data will be watched closely, bearing in mind that Britain's central bank said it won't lift interest rates till the jobless rate falls to 7%, something that's been thought unlikely to occur till 2016. Slightly closer to home, analysts are predicting that Hong Kong house prices may fall as much as 25% from their peak. Merrill Lynch reckons prices will fall 5% this year and another 15% next year, as housing supply increases and the possibility of rising interest rates grows. Hong Kong's house prices have fallen about 3% since March, and transactions are at their lowest in almost 2 decades, after the government in February imposed its toughest yet measures to curb concerns of a real estate bubble. The New Zealand dollar starts today higher again following yesterday's slightly higher than expected inflation figures, and it's at 84 US cents, 88.15 Australian cents, and the trade-weighted index is at 78.02. I'm David Hargreaves, and that was 90 at 9, brought to you by interest.co.nz.